Hey guys, welcome back. Joe here from 9 to 5ers, and we're going to be talking about banks and getting loans from them and getting them to say yes. Is it possible? Is it easy? Is it hard? Well, you can make it hard. You can get a no when you were supposed to get a yes. But I've been dealing with banks for about 10 years now or more. And when it comes to loans, I've been a simple, easy borrower, and I've been a complicated, pain in the neck borrower. And I've learned some tricks throughout the trade over the years, and I will be more than happy to share those with you guys. Let's just get into it. So there's the disclosure, guys, here really quickly. Pause it, read it, and seek professional advice on an as-needed basis. This is for informational purposes only. So overview, what are we going to be talking about today? Why do banks tell you no? Why getting to the no actually gets you to the yes faster? It's kind of counterintuitive there. We'll get into that. How to look like a good borrower. What does a good borrower look like versus a bad borrower look like? And the answers might kind of surprise you a little bit there. We're going to talk about credit scores versus credit reports. And we're going to have some takeaway actions so you guys can jump out and get into this as quickly as possible and put this video into use in your own life. So why do the banks tell you no? Well, the banks have their own guidelines that they have to follow, and that's through Freddie Mac and Fannie Mae. And they don't get to control these guidelines. These are just rules that they have to follow. And if you don't fit inside of the loan parameters, then you just don't get the loan. And they can go outside of these parameters, but they lose all of the privileges and perks that come with working with Fannie Mae and Freddie Mac. Banks and credit unions have their own guidelines. So if you have think of Fannie Mae and Freddie Mac as the first filter, and if you make it through that, awesome. Then banks a lot of times will have more strict rules in place below that for their own standards. Some banks, they just follow Fannie Mae and Freddie Mac to the T, and then that's it. You would get the loan. Other banks and credit unions will have another level of guidelines below that, and you have to fit in those criteria as well. So just to continue in here, why do they tell you no? Besides the fact that maybe you just don't fit inside their box. Well, they just can't figure you out. You are too complicated. Your finances are a mess, and they're all over the place, and there's just lower hanging fruit out there that can be plucked. So complicated, what does that mean? Well, complicated means that, let's say you have a bunch of rental properties and you do private lending, and you have a car loan, and you have a private loan, and you have child support payments that you have to pay on, and you have alimony that you have to pay on, and there's a lot of stuff that they have to look through and sift through to figure out whether or not you are going to be you're going to get qualified or not. And there's just easier borrowers to go out and qualify. And it doesn't mean that you're going to tell you no. It just means that you're always going to be on the bottom of the pile of people that they're trying to get a loan for and do business with. And you are a mess. And the mess means that your financial documents are all over the place. You're missing pages. You don't have current financial documents. Whatever you're giving them isn't adding up. You only have part or half of what they need. And it's just like, this isn't going to pass underwriting. I'm not going to deal with you. So I'm just going to deal with this borrower over here that has their act together and is way simpler than what you are. The next thing is you're asking for too much. And this might be like, man, you're out there looking at houses, you're looking with a realtor, and you're like, man, I want this $800,000 house, but you only make like 50 grand a year. Well, you're not going to get that $800,000 house, at least through a loan with their bank. A lot of times this isn't a no, but it's more of a counter offer. It's just like, hey, you make $50,000 a year, which is great, but we're not going to loan you $750,000 on a house. Like, we're going to maybe let you get a $200,000 house or a $300,000 house. So it kind of comes in the form of a counter offer. So it's not a no, but it's a no to that particular house. And this is my favorite one coming up here is they just ghost you. They don't tell you no, but they just tell you the same thing over and over again. Yeah, we're working on it and we'll get back to you later. That means that they're telling you no, but they're not telling you no. They're just pushing you down. They want you to get frustrated and give up and walk away. And this can happen for a lot of different reasons. A lot of times they just don't want to tell you no, because if they tell you no, then they have to give you a reason why. So this is kind of their get out of jail free card of just like, yeah, we're working on it. Yeah, we'll get back to you though. And then they just never do. So them ghosting you is the same as a no, but they're just wasting your time and you should just move on. So get to the no quickly. Now, you're thinking to yourself when you're calling up to talk to and you want to get a loan, you're going to tell them all the good stuff about you first, right? Well, that's what you'd intuitively would do, but that actually is the wrong thing to do in my experience. The right thing to do is what I do is when I call up a lender and I'm looking for a loan, I tell them all the bad stuff first. And by bad stuff, it's like anything that would disqualify me from a loan. So let's say that you work for yourself and you're not like a W-2 employee. First thing out of my mouth would be like, I don't have a W-2. I have my own business and, and we live off my wife's income or we live off my spouse's income. That'd be the first thing I would say. Or I would say, hey, I got 10 rental properties and they all have loans on them. Is that going to be an issue? Or, hey, I just transferred jobs and I've only been in this current job for 3 months. This is going to be an issue? Or I'm a commissioned employee and I've only been there for 8 months, but my commissions are consistent. Is this going to be an issue? I always go for the no first because I'm not wasting my time and I am not going to give myself a headache of just like, yes, no, because it doesn't matter how many yeses you get in a row. The no is going to kill it, and it only takes one. So get to the no first. Find the real problem on what is holding you back. And this is different for everybody. It could be that you don't have a W-2. It could be that you have a commission job and you haven't been there for 2 years and shown 2 years of income. Maybe your credit score sucks, or your credit score is or your credit history is non-existent. You're just young. You don't have a credit established yet, or you've only paid for everything in cash. Whatever. Find out what the no is. Your first option is to fix that problem and call them back. So let's say you have a crappy credit score. It's on the cusp of passing, but you're still in the fail zone and you're only like maybe 10 or 15 points away. Can you fix that credit score and bring it up? Do you have a commission-based job only and you got to wait 2 months before you get your full year of income in and now you pass? Magically, now you're good. Try that. Or find a lender that does not care about that quote-unquote issue. No W-2, no problem. I've ran into lenders that were just adamant about having a W-2. You have to have a W-2 or we're not going to give you a nickel. You call up the next lender and they're like, oh yeah, no problem. There's other things we can look at, And they're just like, and you're looking at them like, why was this such a huge problem with this other guy? And now with you guys, it's no big deal. Who knows? That's their own regulations that they have inside their bank, their own criteria. And this is the question that I've learned to ask that takes the pressure off the lender and makes them a part of your team. It's no longer an adversarial relationship. It's a team effort. And that is, what do I need to do to get you to say yes? What do I need to show you? What do I need to get? What information do I need to get to you that makes you say yes? And then that also pinpoints where their issue is. Oh man, you just got to get your credit score up like 20 points and we'll be good to go. Or, hey man, like you're missing bank statements. Like you don't have any bank statements. Like I need 60 days worth of bank statements. Send me those over. It could be as simple as that. or whatever. But what do I need to do to get you to say yes? That is a masterful question to ask your banker, and it saves a ton of time. Good borrower tips. How do you look like a good borrower? Well, there's the credit score, and then there's like, how much you make versus how much you're trying to borrow. There's all that. But let's think of some other stuff here. Be professional. No sob stories. Don't call them up and be like, and tell them your whole life story. As a personal person, they care. As a professional person that's trying to run a business, they don't care. They cannot lend to people based off of having a sob story and not having a sob story. That's not how they're legally allowed to lend to people. So get past the sob stories. Nobody cares, to be brutally honest. Be prepared. Have your W-2s ready. Have your tax returns ready. 2 years of tax returns. Are your current tax returns done? If they're not, tell them that you're working on them and you're getting them done, and you already have the previous 2 years ready to go. Your investment documents. Do you have a 401k? Do you have a Roth IRA? Or do you have a self-directed IRA? Get those documents ready. And by those documents, I mean it has your account number on there, it has your name on there, it has your address on there, and it's the most recent statements. Do you have other loan documents? Do you have a payday loans that you're trying to pay off? Do you have a medical bill that you're trying to pay off? Do you have a car loan that you're paying off? Well, get the most current statement from that and show that it's current and you're making the payments, and give it to them. Bank statements. Generally, they want 30 to 60 days. Your name, your account number, your address on there, and then a lot of times what you can do is give them your credit report. Now, they're going to tell you that this credit report is not going to fly, in the simple fact that they have to pull your credit from their own for themselves. And that's fine. But giving them your most current credit report, even if it's 6 months old, is just some icing on the cake. It says, I know what my credit report is. I know what my score is. This is where I'm at right now. And I understand that you have to pull my credit, but based off of this credit score and based off of all my other documents, if my credit score is still at this level or higher, will I get a loan? And you want to make them pulling your credit one of the last things that they have to do, because you don't want to go to 20 different banks that give you 20 different no's. And then when you go to the 21st bank, your credit score is a wreck because it's been pulled 20 times in the last 2 months. Be available and respond quickly. When I mean quickly, I mean within the hour. Your loan officer or the bank manager is going to ask for something, and they're going to be like, hey, the underwriter needs this document. Please send it. Send it to them within the hour or before the close of business. Be on your game. Focus. Respond quickly, because that lets them know that you're serious about this and you're not just like whatever. Be assertive, but not annoying. So because the banks can drag their feet for whatever reason, I don't know why, they get bogged down. Who cares? Be assertive, but don't be annoying. Just say, hey, when do you think we can close this? When do you think, check in with them on a weekly basis. Hey, do you guys need anything? Are we still, what's the linchpin? What are we hung up on? What are the underwriters saying? Because you can't talk directly to the underwriters. You're gonna have to talk to the loan officer or the bank manager. And you don't need to call them every other day. Hey, what's going on? Hey, what's going on? That's just being annoying. But be assertive. Call them, like check in with them once a week. Hey, what's going on? Like with this issue right here. Did it get fixed? Does the underwriter need anything? Are we still closing? Do we have a closing date? Be flexible in the fact that you might have to jump through an extra hoop, give them an extra document, extend the closing date for whatever reason, set up a checking account with them. Hey, to get a loan with us, you got to have a checking account with us. Okay, fine. I'll set up a stupid checking account with you. Who cares? Be flexible. Don't let the loan fall through because your pride got in your way and they wanted something that you thought was stupid. Just do it. You know, just if they're not asking for something ridiculous like, hey, we want you to set up a savings account with us, and you got to put a minimum of $100 in there. Just set up the stupid savings account and be done with it. Credit scores versus credit reports. Now, these are different beasts. Well, they're the same thing, but one is way more detailed than another. So let's just go through it here really quickly. Credit scores, a lot of times when you're looking on your phone or an app, that's like a soft inquiry. Like it's you're not going to get dinged for looking that up. There is a hard inquiry, which what credit reports do. That's you getting a ding on your credit of, hey, someone's checking your credit report. Having one hard inquiry or maybe two is not going to affect your credit score that much at all. And those, if it does, that ding usually takes care of itself within a short amount of time. But that is the difference. You might see a ding on your credit. Maybe it'll drop by 5 points because you did a hard inquiry versus a soft inquiry, which doesn't affect your credit. Credit score is a snapshot. It's an overview. It is you at a 10,000-foot view. A credit report is detailed information. And I mean detailed, which means it shows all of your loans, all of your payments, are they on time? Have they gone to collections? Have they been charged off? Are you 30 days behind, 60 days behind, 90, 120 days behind? How much do you owe? What is your current balance? What is your current payment? Are you actually current with that payment? Credit scores are not going to tell you that. Credit reports are the detailed information. That's part of the reason why it's a hard inquiry. Credit scores are a basic overview. You're basically this person when it comes to credit. You are this. If you have the same credit score as the person next to you, if you're at 700 and they're a 700, as far as anybody else is concerned, you're the same exact person. Credit reports will tell you the difference between that 700 person and you, the 700 person. You might have a totally different makeup of what gives you a 700 credit score versus them a 700 credit score. And if you have any problems or issues on there, you might be able to fix them. You might not be able to fix them. One of the issues that you can't really fix is your credit history is just not long enough. Well, you can't make time go forward, so you just have to deal with that. But if there's an error on there, you can go, okay, I need to fix this error. This company said I didn't pay off this loan, or it said it's still open, but I paid it off. Let me call them up and have them close it. And credit scores usually come with a credit app, and it's literally like an algorithm. Like it's just a guess. Like they are just guessing. Your credit score on your app could say 650, and then you actually go and pull a credit report, and this is going to be, oh, you're actually at 550 because of this, this, and this. Because they did the full hard inquiry and they have the detailed information all there. This is your actual credit score, errors and all. And I said your real credit number here and I said errors and all for the simple fact that your errors are bringing you down even though they are wrong. You need to get those fixed so you can actually get your real number, because a bank is going to look at this and go, well, I don't know if this is an error or it's not, but this is what your number is. So takeaways: pull your credit report to get ready. And you want to pull it if you are ready to buy. Don't just pull it just to pull it, because you can only pull it and not affect your credit every year, like 365 days. So just remember that if you're not going for a loan and your credit report or score doesn't really matter at this point in time, then there's no point in pulling it. And fix what needs to be fixed now. Like go through it, comb through it, and see, are there any errors on there? Are there any mistakes? Start working on fixing those now before you even go to a bank and start asking for a loan. Get your documents ready. Now, this is like your W-2, your bank statement, all that stuff. And I said file and paper formats. Just as a security factoid here, don't send anything over the internet that has your personal information on it that is not through a secured portal from the bank. And if you're not comfortable doing that, then drive the actual paper copies down to the bank and hand it to the bank manager, and make sure that that man or woman is going to be putting them in a safe spot, and only very, very few key people have access to your information. Don't just send your social security number or your bank statements, with your account number, with your personal information, just through the email, because there are people out there looking and preying on the banks because they know that banks are going to be getting certain types of emails and information. And they're reading that subject line. They might try to attack it and take your information, steal your identity, and all that bad stuff. So just be very, very, very careful when you're sending private information over the internet. You can take it to the person, take it to the bank in person. You can do a certified envelope through the United States Postal Service, or you can use a secure portal, but use something that is secure. And start networking for lenders. If you know someone that's got a loan recently, the auto loan, home loan, whatever, start talking to them. Hey, what was it like working with ABC Banking? And then they'll give you the honest opinion, because every bank is going to tell you that they're the best, when in fact, they are what they are. So talk to someone that you trust. How was it working with them? Were they easy to talk to? Did they get back to you? How long did it take to close the loan? Were they a pain in the neck, or was it easy to close the loan? Improvise, adapt, and overcome. You could potentially get a no from a lender, or they might give you a counter offer back to say, hey, we're only going to loan you this much, and it's way below what you want your loan to be for. Your credit report might have some errors on it. Get them fixed. Or you might just have a crappy credit report and you need to start fixing it by paying off that loan that you forgot about, or closing out this account that you thought was open and it's hurting your account, or whatever. Know what your situation is before you walk into it. And the adapt part is, if the bank tells you no, find out what the no is and either fix it and go back to that bank, or find a bank that's not going to tell you no. And overcome. Anytime there's something that's holding you back, make sure that you identify what the issue is and figure out how you're going to get past it. Do I need to raise my credit score? Are my financial documents all over the place and I need to get them in a nice, clean, organized, updated format that I can send to a lender? Does my credit score, am I like 15 points away from getting a mediocre loan versus an excellent loan? Like, what do I need to do to get that up? Is it worth me raising my credit score 15 points, 20 points? What it is? Like, how hard is that to do? Getting a bank to say yes is not hard if you know what they're looking for. Guys, just tell me what your thoughts are on this. Let me know what your issues have been with down in the comments below when it comes to banks. Has it been a breeze? Has it been hard? What's your current issues with banks? What has stopped you in the past from reaching your financial goals? What types of videos would you like to see in the future? Please like, comment, subscribe, and check us out on Facebook, 9 to 5ers. Like us and follow us. We appreciate it, guys. We're here to make you smarter today and richer tomorrow. Have a good one.